When we last talked with Robert Tigner in October, dairy farmers were faced with uncertainty after the USDA's Milk Income Loss Contract program expired with the passing of the Farm Bill deadline. Milk price was having difficulty keeping up with high-priced feed and other expenses. We talked with Robert Tuesday about a change in the export market, continuing feed costs, and why supply may be on the rise.
Well, milk production last month was up 1.7%. That's a change from the previous couple of months. We had been seeing some decline in milk production. One of the most significant changes was that we saw more milk per cow in December than we did in previous months. So we're headed towards a little bit higher milk production than we had towards the end of last year.
That plays into a few things. During the summer of last year, there was a concern that with the different feed sources producers were having to use, that they didn't know how much milk they were going to get. But if I remember right, the supply wasn't necessarily the big concern. The big concern was the price that the consumers were going to have to pay, and producers were worried about chasing consumers away.
Right. There was some real concern later on last year that we were going to see much higher prices. And part of that was because the expiration of the most recent Farm Bill. That expiration actually would have led to old law that would have doubled milk prices and probably consumer milk prices as well. Is
the producer getting enough price, though?
Well, if you look at the margin that producers are getting, we're in the historic low third of margin, and for much of last year, we were actually well below that. So it's been a real struggle to cash flow these dairy farms.
What's the problem behind that? Feed costs, I'm assuming, are still high?
Feed costs are very high, yes, compared to a few years ago, of course. But one of the other changes that's happened just recently is that milk prices have started to decline. There's an expectation by traders and the dairy industry, the processing industry, et cetera, that more milk is going to come online here in the next few months. And so the futures prices have been declining just recently.
Robert, overall feed cost, the beef industry is facing high feed costs as well. For the dairy industry, where do they stand?
Well, that's going to be a concern as well. Feed costs have been increasing, and one of the reasons they've just been increasing recently is that we have less and less confidence that the Corn Belt drought and the Southern Plains and Central Plains drought is going to break. And unfortunately, what traders are doing now is trying to get ahead of that lack of moisture that's appearing in the Corn Belt, in the Western Corn Belt, in Iowa, et cetera. And those feed prices are increasing due to that. That's translating into higher cost feeds for dairy producers and for any cattle producers, for that matter, livestock producers. And it's making it more expensive to feed dairy cows and to produce milk. And thus, looking out for future margin for dairy producers, it's declining, not down to the historic lows that it had been recently, but it is getting low towards the low end of the scale.
Let's close out in the export market. When we talked in October, it was incredibly strong. It was incredibly strong mid to late 2012. Where is it now?
Well, it's flattened out for 2012. The most recent data that we have for 2012 was in November, and it's below that level that we had seen early on in the year. The export market is exceptionally good for us, however, compared to previous years, but it is starting to weaken somewhat.